Hello everyone. My name is Harry Mann. I'm a partner in Matrix Partners China. So maybe I'll just start off with a brief introduction of Matrix by ourselves. We've been around doing VC investments for about 30 years, headquartered in Boston, and has been managing about $4.2 billion worth of assets in our US counterparts. In year 2007, we started to expand internationally and raised our first fund in India in 2007, and then we also raised our fund in China in year of 2008. Which is the China fund is currently managed by me and my team, which is a size of roughly $300 million US. We focus ourselves as an early stage technology investor. So I would say around 60–70% of the deals that we do are early stage Series A deals in China. We do a selective number of Series B deals in China as well. We like technology companies, especially in the TMT space, internet, wireless, digital media, online gaming, all sort of consumer internet-driven businesses. So to answer your question, right? I mean, couple of deals that I would like to mention or to be mentioned in this particular conference is we have made about 10 investments in our current fund. Things that are in particular related to digital entertainment or digital media are this one company that we recently closed about a couple months ago. It's called Baofeng Yingying or Storm Player. They are the largest media player in China, very similar to like Windows Media Player or Real Player, but they have a China angle. So they are the #1 market share in China, and we own a stake of it. I think ultimately we believe in the overall, video space in China, and having a stake in the media player actually makes a lot of sense for us. And a lot of people I know that mention about online gaming, which we haven't so far yet invested in any online gaming companies. But in terms of the IT infrastructure plays, we've actually made an investment in the company called 21BNet. They are the largest IDC and CDN provider in China. Basically, IT infrastructure supporting all the websites that needs to be hosting, colocation, and web acceleration or content distribution business. That company has been doing particularly well as well. And as you can imagine, they are the largest in China, independently run, that have no problem that the North and South, the China Netcom and China Telecom problem that a typical carrier operator has been encountering. First of all, I think I agree to you that we actually made about 10 investments since the founding of the fund, and most of the investments were done in 2008. In the past 5 years of 2009, we haven't made a single investment. And the main reason for us I wouldn't consider ourselves as been slowing down. In fact, if you ask me whether I'm busy or not, I'm actually a lot more busier than before. We're looking at a lot more deals. Deal qualities has been, in a way, I see deal qualities has been increasing, mainly because of the market has not been good. A lot of the so-so or mediocre company has already been auto-filtered out. They can either not survive through this downturn. So in general, deals coming to our table are improving in quality. But the reasons that we have not been making investments so far, it's not because of any, I don't see any particular reason. I mean, obviously, valuation is one of them. Two of the previous, I would say, speakers have already been talking about that, overall the expectation in between the founder and the VCs are still there's still a gap in between us. When we see the capital market has come down quite a lot, we would try to ask ourselves, does it really make sense to invest in a company that can only help me to make 3 to 5 times? I can make that in a public company, and why you? So I mean that question has been ongoing, fluctuating inside our minds all the time. So valuation is one of the issue, and the other issues is that I think it's just it's a matter of fact that we haven't found anything that actually fits into us. We have a relatively high bar in terms of making investments. That includes valuation is only one of them. That includes the quality of the founder, the business model itself, and to also to consider other risks that were involved in making investments in the company. So if we will encounter some interesting companies in the next couple of months, there's nothing that prevents us from making 10 deals in a month. We're not going to go against that.